to take the actual volatility, then your profitability will be quite higher. So fine. So 0.96 is the volatility on daily basis we got, and yes, the webinar has started. So this is 0.96. We have got the daily volatility, and intraday volatility or the daily volatility of Nifty future, which is 0.96. I have just multiplied with the last traded price of Nifty, which is 7382. This last traded price is the last traded price of the Friday, previous closing days. If you take little bit closing price also, it will be little bit more accurate, but those closing price and the LTP will have a very minimal differences. So here I have just taken the closing price 7382 multiplied with 0.96 divided by 100. So this has given me, as for the volatility, I am expected to move by 71 point. So I will be just taking my 3 cycles. 3 cycles I will be just calculating. So based on 10 o'clock data, so I will be just, this is previous day Friday experiment, whatever we have done. 71 point we are expecting. Then I need to take the midpoint of the high and low for today, which is 7465.8. I will round it to 7466, and low is 7415. So 7415 and 7466. This has given me 7440.5. I have rounded it to 7441. So now what is my process? This is 71 point of volatility expectation, the price range as per the volatility expectation. In this, I'll be applying the Gann angle parameters. So for Gann angle parameter, 0.37 degrees till 0.86 degrees. So each step I'll be just calculating that degree factor and applying that same way, square root of 71 added with degree factor whole square. Same way, square root of 71 subtracted from the degree factor and taken the whole square or the double multiple. So by this process, I have just calculated the resistances and the supports of this 71. Then the next step, here is my modification. So what I did here, I have taken the midpoint. Added this midpoint is F7. So this midpoint is added with the angle factor. So degree factor, whatever the degree factor you have, this degree factor multiplied with the expected price resistance. So by this process, I have added here, and in the opposite side I am going to subtract. Same way I have just, so my first cycle is telling me I'll be starting my upward cycle from 7443. So I'll be starting my upward cycle from 7443, and my upward cycle will have a stop loss of, or I can buy at 7447, rather I can say 47, and my upward cycle will have a stop loss of 435, and I'll have a target till 7479. So this is my first cycle. So second upward cycle, if I wish to calculate, I will be calculating from 7479. So 7479 is my second upward cycle. So this has its tendency to take me till 7517. If I wish to take the second downward cycle, just this is the point of confusion for many. Upward cycle and downward cycle, I'll just make it more simpler. As per this principle, I am defining 3 upward cycles. Upward cycle 1, upward cycle 2, and upward cycle 3. 3 upward cycles. And my rule is, in a intraday, I can move maximum 3 upward cycles, or I can move minimum 3 downward cycles. So there is only 3 cycles I am specifying. In a high volatility condition, you may go for 5 cycles. This 3 and 5 from where I have got it? It is not my rule. As per the Elliott's principle, every price move has a 3 wave structure or a 5 wave structure. So for that reason only, I have taken 3 upward cycle and 3 downward cycle. So by this process, what happened? First, I have just calculated my upward cycle. We started from 5447. Stop loss is 35. I can move till 5479. Same way, my downward cycle for the first move, which is 7441. So which is telling me to sell at 7435. So it is telling me 435. Stop loss I will be putting it at 7447, and for the target of 7411, for maximum target of 7411. And also I have told you we will be finding a maximum resistance or support at the 45-degree angle, which is in the downward move, it is 7424. So we will be getting for 7424. So 7424 is the level where I can get the, so this is for Friday. So this is for Friday, whatever I have done. So just I'll give you one color so that you can. So this is for Friday. So this is for today we are doing. So today first cycle is this one, cycle 1. Second cycle, same way, upward and downward cycle we will say. So second upward cycle will be starting from 7479. So let me see the current price where it is. So current price is 7458.8. So 7441. So 7458.8, and it has touched that 68.5 and come down. So, or we have derived the midpoint from that also. So currently we have just in this particular resistance level. So if we cross that one, then we have all probability to touch 7479. As a trader, what you can do? Just wait for the crossover of 7460. If you wish to take a quick trade, so just wait for a crossover of 7460 and keep a stop loss of 7435, because that entry of 47 we have already crossed. Sorry, 35.0, 7435, and expect till 7479. If it crosses this 7460, then only you can make it, and just wait for a minute or two, because this is a very strongest zone. If you fail to cross this one, then it may move in the opposite direction. So this is the first cycle you are doing. Suppose you are saying that no, I do not want to enter in the first cycle. First cycle is already, it has given me some 10, 12 point or 13 point support, means 13 point of profit. So I do not want to move in the first cycle. So just go for the 7479. Second cycle, if you wish to buy at 7485, keeping a stop loss of 7473, and upward cycle will be 7517, downward cycle will be 7448. So if you are just going for a cycle 2, upward cycle 2 in the upward direction, you wish to, if you want, then buy at 7483 and keep a stop loss of 7473 for targets 7517, and this will have a maximum resistance at 74 7498 level, 7498 level, and if you wish to sell it at 7473, 473 in the second cycle, and you will be having a minimum target 7449, 7449, and this is your stop loss of 83, 7483, and you're having a target of 7449, 7449, and you will have a great resistance or great support at 7462, 7462, 7462. So this is what you can do as per the current scenario. If you wish to participate in the first cycle itself, you can participate with a stop loss of 7435 and anticipation of 7479, or let it give you a breakout and go to 7483. Again you can participate in the upward cycle and with the expectation of 7517. If you do not wish to anticipate in the first cycle's upward movement, then you can wait for 7435 breakout. So that time you can 7435 breakout. So if this level also breaks, you can think of selling it, keeping a stop loss of 47 for target of 7411. So this is how you can do it. So 7460 is crossed, 64 has come. So those who have entered, just to enter for a target of 7479. So 7479, so this will be your first target. If you wish to enter, you can enter for a 7479. So this is 60 has been crossed, but it is finding out a toughest resistance there because it is a 45-degree price point. So let it successfully cross that 68. So if you can just see, this is our level 7441. So 60 crossed. So better if it is 63.75, which is the next level, which is coming to 7468. If it crosses that one, so with no time it can toss that 7479 level. So if it crosses that, then it will be more stronger and it can participate in the it may go further upward and it may touch that level of 7479. So similarly, why not Bank Nifty? Why not Bank Nifty? So we'll see Bank Nifty, which has a greater volatility, which we can get some greater price move from there also. So here 1.78, great level 1.78, and what is the price it has settled? So I think I have this one for 29th May. So 15,349, 15,349. So 15,349, 349, and C60 it is not holding. So today 15,625 and 16,427, 427, 625. So 16,000, so 15,625 and 15,427, 15,427. This is the high and low. Midpoint 15,526, 15,526, and expected price movement is 273 point. So first cycle started from 15,531 and it has the tendency to take you to 16,600 15,664. Currently, if you see, you are at 15,538 level, 538 or 39 level. So 539 level. Wait for the 48, 49, 15,549, giving a stop loss of 15,503. You can buy at 15,549 with an expectation of 15,664. In between, you will be finding a toughest resistance at 15,596. If you want, you can note it down these levels. This is the first cycle. Second cycle, third cycle, we will follow on based on the optimumness what you are achieving in these two directions. Any formula, we are taking the degree factor. Based on that, we are applying it. So what are the steps we are involved here? We are calculating the expected price range from daily volatility. Using the Gann angle, 11 trend lines, we are estimating the resistances and supports of this particular price range. Resistances, again we are finding out in the third step, which is current price or the midpoint of this, added with resistance price range into Gann angle factor. So this is the two new formulas which I have just introduced in this particular method, and where buy sell decision we are making at third resistance or third support level. You can take it at any time, Manikandan. So the moment you are reporting to the market, that time is important for you, and that particular time, what is the high and low, you can take it. So before going to the option strategy thing, I will be just taking your few minutes to explain about our services and products. So Smart Finance has 9 different products. So the Gann concept is discussed in this particular course material, wherein you are getting one book, 3 DVDs and 1 automated software. In this automated software, we have Gann intraday tool, Gann trend finding tool. So the trend finding tool, we have used this particular method, the method what you are seeing now. However, we used to take the current volatility into account and make the estimation of that. So I'll just show you that how it happens here. So Nifty, you have already seen what is the daily volatility you are taking from the websites, but slightly our tool will be different because it takes the current value into intact. So Nifty given a great breakout, 68 level it has touched. So I think you will not have any hurdle till 79 now. So this is the trend finding tool. Suppose if I am taking for the same Nifty, so same Nifty, so how the paid tool will be different from that. So it takes that currently you have 14 point of 0.96 you have given. I have given 0.96 was the daily volatility. If you take into consideration, so 365 square root into 0.96. So this is 18.34. 18.34 is the yearly volatility as for the NSE information. However, if you take the current data into account, current price into account, then we have only 14.72 volatility. And day end, if all these levels are penetrating till 7542, or if it is going in the downward direction till 7385, then this volatility can go to 24% or to 20%. So this is a real-time estimations based on this same principle. So however, we have taken the however, we have just taken the NSE data because it is free to get those informations. On that we have done it. This tool uses the real-time informations. And besides that, you will get Gann intraday tool, Gann square of 12, Gann square of 9, Gann VTST tool. All these tools comes with that Gann product. Now moving into, so we have got 74, I think 79 will surely toss in the Nifty. So now we have got the got the means 9 products. Out of these 9 products, this 5th product covers this particular GAN concept, and it comes with that particular software. So besides that, those who used to take the entire package of 8 products, excluding this option strategy, so if you take it separately, it costs 26,000. If you are taking at a lump sum, then it costs you 12,000. It comes with 6 printed book, 18 DVDs, and all our softwares except option strategy. So this is our product, and option strategy software, it comes with 10,500. You get 7 hours preparatory, means 7 hours of lectures to understand different option concept. You get a software, you get a book, and we used to give time to time some option strategies to the buyer of that product so that you can make utilize of that software effectively, so that there is no commitment for that, but almost every month we used to give 1 or 2 strategies to the buyer of that particular product. If you wish to, you can take those strategies also, implement those strategies also. Besides that, we used to conduct different programs to educate the traders. So we have just formulated two programs in the month of June. One is for the advanced option traders, wherein you will be learning about option price model, put call priority, implied volatility, how you can understand that, option Greeks, how you can form delta, theta, vega neutral strategies. So how you can form option strategy in the direction of volatility, how you can form specific option strategy which can give you regular income, and some complex option strategy with the pair trade. So this is a in-depth program. It has a 3 theory session which covers all these things. Then you will be getting 6 months support from me. Every month 3 to 4 option strategy calls with their expected profitability and liability. I will be sending across to you by email as well as SMS with proper exit from that call. And time to time also I will be sending the analysis report of that calls by email, so that you can understand that concept also. And you will be getting this option strategy. So option strategy software, book, and other things. So this is costing you 30,000 rupees. So do remember, my association with you will be 6 months to train you on these concepts as well as to make you to earn something from this option strategy. So earning, how much I can earn if you ask me, so I do not have any answer, because that depend upon your capital, what you have involved, how much tradable capital you have. So based on that only earning parameter will change. So also I cannot give you that what percentage of profit I can get you, because that also depend upon the strategy what I am forming, strategy what you are implementing. So I will try my best to maintain some 1:2 or 1:3 risk reward ratio. So if your loss risk is 1 rupee, I will be forming a strategy which can have a 2 rupees, 3 rupees or 4 rupees gain. So based on that only I will form the strategy. So that is how the calls will be given, and it is not a crowded calls. It will be 3 to 4 calls only per month. So with proper analysis. So this is how this program will go on, and this is costing you 30,000 until 31st May. This is there, and we will be taking only 10 to 12 registrations, not more than that. I think couple of registrations is already being done. So once that ends, I will be stopping that. Second is, we have given a new course we have devised only for intraday traders. This is also like you have learnt this volatility with GAN principle. So many other GAN principles, Elliott principle, Fibonacci principle, some of the advanced intraday techniques you will be learning, and you will be also getting a support for 6 months, daily 2 to 3 intraday only calls will be given to you, and you will be given our integrated tool software, wherein all this Fibonacci, GAN, Elliott softwares are means available, so you can make use of that program thing also. So this program costs you 19,000 rupees. These two also have a limited limited registration parameter. So for option strategy, if you can ask it, by June end, if this bank nifty crosses 16,000, closes above that, my profit will be 5,825. And by June end, if the bank nifty settles at 15,300, then only my losses will be 18,000, or else not. But what is my trend parameters are saying? So that is also very important. So what is my trend parameters are saying? So this is my advanced price trend. So if I move to say to a level of 15,400, 3,000 rupees I am just losing. And if I just, I'm talking about, if I just come down to 15,000 level, still also I have a loss. 15,200 level also I have a loss. And I think below that only, if it comes to 14,700 also I am in loss. 16,000 level also loss. During my holding period of 5 days I am talking about. So at this point it doesn't make any sense if I am initiating this trade. It doesn't make any sense. So why can't I go for the same approach what I have followed in the Nifty? Say 15,000 call option. What is the 15,000 call option value? It's 790. So why can't I go in this order? Buying a 15,000, I'll just go in this order. So buying a call option, because this is the beginning part of the next series, so I have to be very careful, otherwise my strategy. And call option 16,000, sell one lot. Similarly, put option of 15,000, take 1,000 point difference, buy at one lot. And put option of 14,000, so sell one lot. 5 days, calculate. So pretty good risk reward if it goes to 16,000 plus or 16,000 level. So you are having some 2,500. If it fallen down to say 15,000 level, so you have 1,800 rupees of loss liability. So this liability also may not come, because this is estimation is being taken 82 and 260, so that differences may change. So Greek terms, how much it differs, so that also we need to see here. So 15,000 call is having a Greek of 0.74, 16,000 is having a Greek of 0.4, so 0.34 Greek you are adding, and in the put option 0.27, 0.27 and 0.9. So this is your net Greek, 0.74 positive, then 16,000 is having 0.41, so minus 0.41, so here it comes to 3, 74 has 3, so this is the positive Greek you have in the call side. In put side, how much Greek you have? So minus 0.27 plus 0.9, so 14,000 is having a Greek of 0.09, so 0.9, so 8, 18, negative 18, positive 13 here, so 0.18, this is 5, so 2 answers 1. So 0.15 positive Greek you are having, but this is also a meaningful strategy. So we are locking this strategy. So we have just, I have just told you, buy 15,000 call and put one lot each at 729 and 260, sell 16,000 call and 14,000 put at 293 and 86 respectively. So this has a profitability of 2,500 plus in coming 5 days, and liability of 1800 at 15,000 level. So you can think of initiating this strategy, and same way you can balance it also with couple of bear spreads, couple of bull spreads. So this makes a sense nowadays, because this is where the beginning part of your thing. So beginning part of your settlement cycle. So it will be highly appropriate if we can go with this kind of particular strategy. So any other questions?